what's clear is profit growth right now has been or is explosive. I think for the second quarter, at an annual rate, the S&P is annualizing earnings at $220. So that's roughly 20 times, really effectively trailing earnings. And if we think earnings are going up, to, on the crypto side, address a question that we've been getting quite frequently. You can tell how convinced we are that deflation is the higher probability. And we know that's way out of consensus. This bull market has strengthened. It has deflected all kinds of bad news. The doubling in interest rates in the first quarter, the Archegos leverage blow up in the ecosystem, which many thought could cause systemic problems. We've been through tax hike discussions, which sounded pretty onerous in terms of their impact on capital. And we've seen a big correction. We certainly were right in the middle of it in valuations as those interest rates went up in the higher valuation side of the market, particularly if one is looking at valuations as of this year on this year's earnings. And then the cyclical deflation. Well, the bond market seems to say this is what's happening. And if that is true, because most people don't believe 1.5% is a real interest rate, they've been normalizing, I think, in terms of the way multiples have worked out in the market, the equity market. They've been pricing or valuing stocks as though the normalized interest rate is somewhere around 4%. What if it's not? What if it is half of that? That would be huge for secular growth companies, especially because there's going to be so much confusion. You have all of this innovation, which is going to be very exciting, and then you're going to have all of this destruction, which is going to be pretty demoralizing. It's going to be so important to get on the right side of change. We're very happy at the way the market has performed. It's up double digits. And we've seen now a shift, a rotation back from value as some of these prices have started to unwind, the commodity prices in particular, towards growth. But I think we're going to see toggling back and forth until some of the confusion that I'm discussing here dissipates. What's clear is profit growth right now has been or is explosive. I think for the second quarter, at an annual rate, the S&P is annualizing earnings at $220. So that's roughly 20 times, really effectively trailing earnings. And if we think earnings are going up, and we do, then the multiple looking forward is moving down into the mid to upper teens. That is good valuation support. And then finally, I just want to, on the crypto side, address a question that we've been getting quite frequently. You can tell how convinced we are that deflation is the higher probability. And we know that's way out of consensus, and that's where we like to be. But many wonder how we could be positive at all about Bitcoin if we're not worried about inflation. Well, I think 08-09 is a very good reason why. Why did 08-09 almost melt the financial world down? It did so because of counterparty risk. On fiscal policy, it does look like a bipartisan package for the infrastructure bill is brewing here, which is good news. And it also seems as though the 130 or roughly 130 nations are agreeing, including our own, to a global tax policy such that any corporation around the world would have to pay a minimum of 15% in taxes. Now, I'm sure we don't know all of the ramifications, and I do know that Ireland and Hungary are holding back, and so it's not done until it's done. But I do believe that it is taking the subject of taxes a little bit away from what we thought was going to be a jump in the corporate tax rate to 28% from 21. Maybe it goes to 25, just to put some finishing touches on corporate taxes. But capital gains tax rates and income tax rates, the probabilities there, we think, are going down of increases. If Bitcoin's price on a trend basis, remember, we're still a triple since last September. We may have been cut in half, but we were still a triple since last. And if the price continues to move up, what does that mean? That means increased purchasing power, which is what deflation is. And what we've just seen in the crypto market is really interesting. It's been cut in half, 2 trillion to 1 trillion, the ecosystem, in the last few months. Just cut in half. Can you imagine what would happen if our asset equity prices, bond prices were cut in half in the span of a few months with all the leverage out there? I think we'd be in a counterparty risk problem again, a big mess. Maybe not as big of a mess as we were in 08-09, because there have been some changes. But I do not believe that our financial world would withstand a 50% drop as easily as the DeFi world has. DeFi, while a lot of people who were leveraged 100 times elsewhere in the world were wiped out. I think, now I'm going to get this number wrong, it was either 86,000 or 860,000 accounts wiped out. DeFi didn't skip a beat. I don't think we could say that for the traditional financial world. And I do think that's why the shift towards DeFi, helped now by central banks moving into stable coins and legitimizing digital currencies, even though that's very different from Bitcoin. I do think we're going to accelerate further and faster into the DeFi world. And that too is very exciting.